We are heading into the most important week we have had in over 1 year for AMC stock, and you guys will know exactly why I am saying this at the end of this video, as well as my price prediction that will also be coming at the end of this video as well. If you guys are subscribed to this channel, you know, and it is no secret that I've been calling out a sell-off at the beginning of last week like we've seen, and then a mega bounce either Thursday or Friday. That mega bounce came on Friday. So I might be right, I might be wrong. I'm just going to relay to you guys what the data is telling me, and that is all I strive for, is to be open, honest, and transparent with you guys. Feel free to do what you guys want with the information, but I think there's a very strong case here that AMC is going to continue on this rally. So that's all I'm going to say in the intro. You guys will have to stay through the video to see exactly my thoughts and what I am thinking is going to happen. But with that being said, let's get into it. Hit the like button for me if you're buying AMC, if you are excited, if you are holding on to your shares, hit the like button for me. Let me know how you guys feel heading into next week. Consider subscribing to the channel as well. Make sure to check out the comment down below, the pinned comment for the buy and sell alerts, and go ahead and follow me over on Twitter, as well as the link for Public. If you guys are not signed up with them, send your orders to the lit exchanges. No payment for order flow bullshit involved with Public. Now, let's talk about it, guys. Like I said, AMC was up phenomenally, and this mega bounce that I talked about throughout all of last week essentially happened on Friday. So I'm very pleased that that happened, and I do think it's pretty clear what is going to happen this week as well. And why do I think AMC is going to have another strong week? And really, I don't think the whole week will be strong, and that's something you guys have to know, is I think we are entering into this season of mid caps. Now, exactly why am I talking about mid cap stocks and this whole sector rotation that we are about to see to the upside within these mid cap stocks? Well, AMC is your definition of a mid-cap stock, about a $15 billion market cap. And I know everybody's definition of a mid-cap stock is going to be a little bit different. My personal definition is in between $2 billion and $30 billion is really your mid-cap sector. And what do we know about all of our favorite mid-cap stocks? SoFi, DraftKings, BigCommerce, those are some of my bigger holdings of mid-cap stocks. And these stocks, they're down over 50% from just where they were 2 months ago. And if investors were comfortable buying these stocks 2 months ago, 50% higher, when nothing has changed in the landscape, the Fed is still buying bonds every single month. Even though they're slowing down that pace, they're still adding money into the system. There's no reason why these stocks should be down so much, AMC including. And I know you guys have heard a rising tide lifts all boats, right? That's not the first time you guys have heard that. And I think that's going to play into another strong rally with AMC. And just to point out the obvious here, AMC went through its first ever short squeeze per se. It wasn't really a short squeeze because shorts, by and large, didn't really cover, which we'll go over later into this video, what happened in June, that this was not really a short squeeze. And we're also going to make a video later talking about this whole fake squeeze concept. But this rally happened in January and February. This is typically your season of these mid-cap stocks that get sold off by institutional investors for tax loss harvesting purposes, and then they get bought in the beginning of the year. And I think that's exactly what is going to happen right now. And this year is even more obvious to see what's going to happen. I don't think I have a crystal ball here. I think it's very easy to see that mid-cap stocks are about to get bought up. And even JP Morgan's chief global market strategist, this is something we have talked about many times here on this channel, but Marko Kolanovic, he's gained attention for recent calls to buy the dip, calls attention to a paradox with U.S. stocks on average down 28% from highs, with a median stock down about 21%, while the Russell 3000 IWV up about 22% year to date, and the S&P up 25%. Essentially, what he's saying is large cap stocks. I sound like I'm beating a dead horse at this point, but your Apples, Amazons, Microsoft, Nvidia, Tesla, Google, all of these bigger cap stocks that control over 25% of the market indices and how they move in one direction or the other, right? up or down. These stocks are up a lot and they've stayed up a lot. This is really the rush to safety, whereas all of these small cap stocks, like he says right here, small caps, IWM, and value stocks, IWN, are down on average over 21%. So there's a real divergence going on here, and this is going to play into what investors are going to do to position for next year, because regardless who likes it or who doesn't like it, your institutional investors with billions of dollars, they're going to start buying AMC. So get really comfortable with me saying that institutional investors are going to buy AMC, and we want that to happen. We want to make money when it comes down to it. We want to squeeze out the short sellers that want to bankrupt AMC. And that's exactly what we're going to see, is those short sellers get squeezed out of their positions and hedge funds start to buy the stock to basically help squeeze out the other hedge funds. That's exactly what we want. But like he calls out here in this article and in this statement that he did make. Now, I want to make this very, very clear. This paragraph right here, in quotes, Marko Kolanovic says, for short selling campaigns to succeed, there has to be positioning, liquidity, and often systemic amplifiers of the sell-off. And we have talked about this many times, so I'm sure you guys have already heard this before, but since systemic amplifiers of the sell-off, what does this mean? This means there has to be true problems in the marketplace. There has to be something more than just the Fed buying less bonds per month to really make short selling campaigns succeed. There has to be real issues like coronavirus or a pandemic that is very deadly that lasts a long time, or just an overall slowdown in GDP, gross domestic product. We're not seeing anything that you could tell me right now that the economy is going to go into the toilet. You can't make that argument for me. So there is no logic for the short selling campaign to see these stocks down over 50% from their highs. So all in all, to really wrap this up without carrying on for another 25 minutes about why you're going to see hedge funds start to buy these small cap stocks, it's pretty obvious, and I think it's pretty obvious to a lot of you guys. It comes down to the simple fact of returns. Hedge funds want to provide returns for their clients to keep their clients' money longer. We have seen that with Citadel, with Millennial. It's a given fact. Now let's turn to AMC. Let's get into the data and then let's go over the price prediction. Probably what you guys clicked on this video for. So if we're talking about the Stonk tracker data, this is what really made this mega bounce come to fruition, was the puts running from out of the money into the money and the calls running from out of the money, or from, out of the money into the money. Now, as far as next week, 17,000 calls that are in the money, 73,000 calls that are out of the money, 72,000 puts that are in the money, 52,000 puts that are out of the money. I mean, we do have a couple thousand, right, puts that are in the money and calls that are in the money. So if the puts run from into the money, out of the money, and the calls run from out of the money into the money, we can add buying power in that way. I don't expect anything too crazy as far as the option chain is concerned, but I don't think that's really going to influence the price action moves that we see and what we're going to talk about here in this video once we get to the technical analysis, because I think most of this week will be fueled by FOMO buyers, day traders, and hedge funds buying the stock, not shorts covering, and that is very, very key to distinguish the two. Hedge funds buying the stock is a lot different than hedge funds buying the stock to cover on their short position. That's just not going to happen because we've never seen a short squeeze. And if you guys are confused about AMC has never been through a short squeeze, not in January, not in June, make sure you watch the video that I'm going to post later on today about the fake short squeeze. But that's really a topic for the other video that we're going to talk about. Now, that's really what you guys need to know from the option chain. Nothing too crazy. As far as the Ortex data is concerned, 20.33% short interest of free float, about 104.33 million shares that are sold short. We know these numbers are very conservative. The actual the exchange reported short interest numbers are going to come out in between 20 and 25% for the hedge funds that are brazen enough to actually report their short interest. I'm considering the hedge funds that have all of their short interest that is hidden because they use the option chain to make it look like they've covered. So the situation here is even more bullish than what meets the eye. And that's really all I'm going to say for that. Now, share utilization is 79.43%. Nothing too crazy. I don't even care about this until it gets up to over 95%. Days to cover, 2.54 days to cover. Now, we have seen a direct discorrelation between the days to cover and the share price, meaning share price goes up, days to cover goes down, days to cover goes up, share price goes down. What we're seeing right now, what we have seen throughout January and June, it's very easy to see. Look at this green line and what has happened with the share price. Every time before we've seen a major rally in AMC stock, we've seen the days covered go from highs to lows. Back in January from 2.32, and you've seen the share increase of AMC. And the days to cover just plummeted into the ground to about 0.5 days to cover, back up to 1.7 days to cover, and then the June rally hit back down to half a day to cover, and then now we're up to 1 year highs, and we have seen the first tick down for the days to cover. And we've seen a 19% increase to AMC share price on Friday. So I want to see the days to cover either come down and the share price go up back to that $40 level at least. If not, I want to see the days to cover start to go back up and the share price goes down. That's actually incredibly bullish because I think this correlation is actually a big deal and something to pay a lot of attention to. Now, let's get into the actual price prediction for AMC and this upcoming week, because I don't think the whole week will be bullish. Like I said, I think Monday, because it's typically our strongest day, will be bullish, as you do see a lot of traders, and Monday is typically our best day. I think you'll see a bullish response. I think you'll see a 5 to 10% update on Monday. And considering that we are still from our highs at about $45, even, early November, late November, at about $45 per share, all the way down to $20. I think it makes sense to buy AMC to play this continued bounce. So I do expect bullish activity on Monday. I do expect a calm day on Tuesday. I expect a 1 to 3% up or down move. Wouldn't surprise me if we're down 3%. 2% on Tuesday. Then on Wednesday, I do expect another pretty neutral day. And then on Thursday and on Friday, I do expect the big bounces to continue. Why do I say this? Because if you are somebody that believes that the Spider-Man numbers, all the records we have been breaking with Spider-Man have basically constituted this 19% move on Friday, that's exactly what you should align yourself with. I don't necessarily think that's the case. I think it had something to do with the rally that we seen on Friday, but I don't think it was the whole reason why. I do think there's a lot of other things that played into why we went up 19%, especially FOMO buyers and day traders heading into the stock. But we're going to get the numbers for the Matrix movie on Thursday. We have not seen a sequel to this in over 15 years. I believe it's 17 or 18 years since we've seen a sequel to this. I have personally heard a lot of people talking about they cannot wait to go see this movie, and they're going to see this. So I do expect more records to be broken on Thursday and be announced because of the Matrix movie that does start playing in theaters on Wednesday. So I do expect strong moves on Monday, Thursday, and Friday. And I want to see that mid cap really move to the upside. And that's going to give us more signals to go off of, especially what to expect in January. Now, let's get into my base case, best case, and worst case scenario for AMC stock. Obviously, it goes without saying, best case scenario, worst case scenario, but my base case scenario is what I expect to happen for the stock. And my base case scenario is to see the stock shoot up and go to about $35 per share and then pull back a little bit to about $33 per share. I really expect us to close in between the 200-day moving average and $35 per share. The 200-day moving average is at $32.25 per share. So I think we'll close in between this range by Friday. Wouldn't surprise me if we close over the 50-day or the 100-day moving averages up here at about $37, $38 per share. Would not surprise me whatsoever. I don't want to lead you guys on like that. I want to be pretty conservative here because I don't think, the big move is to come just yet. But I think we're going to start making those next moves to the upside. So in between $32.25 per share and $35 per share is really what I expect. My worst case scenario is a fallback down to this support level at about $24 $4 per share, really about $25 or $26 per share, in between this range that I have right here. And then my best case scenario is going to be heading up to about $45 per share. I think it's going to be pretty hard to get up there, and I think really the best case scenario is in between $40 and $45 per share, but $45 per share is definitely possible. Anything's possible with AMC, and that's definitely going to be my best case scenario. So to reiterate, best case scenario $45 per share, worst case scenario about $25 to $26 per share, and then my base case scenario is in between $32 and $35 per share, settling probably just under $35 per share, as that is going to be our resistance level after we do cross above the 200-day moving average. So I hope that provides you guys some context into why I am making these claims and why I am saying this. I hope some of this information does resonate with you guys. If it does not, if you have any questions, let me know down below in the comment section of this video. In the meantime, hit the like button for me. Let me know if you're bullish on AMC, if you're excited, how you feel heading into next week. Hitting the like button lets me know that information. Consider subscribing to the channel as well. Make sure to check out the link down below in the description for public, as well as the link pinned down below in the comment section for the buy and sell alerts, and the link to go follow me over on Twitter. Love and appreciate you guys. Thank you for watching this video. I will see you in the next one.